Investing for a techno-feudal future. Um, so in this video, I want to talk about a big theme to my overarching investment strategy. Um, I About a year or two ago, I decided to. My goal was to eliminate any personal biases I might have towards any individual company. So I wanted to kind of just like look at the world kind of like a like a game or like a monopoly board, if you will, and dig into the financials of the companies, um, and the future economics and the competitors and the financial well-being of various companies, regardless of our personal biases. Like say like Meta or like Exxon Mobil, like we're gonna have like these. We're gonna be ready to either like or dislike those companies based on our preconceived notions or our education up to this point or our like personal politics or whatever. I wanted to eliminate that because my politics is to make as much money as possible, to be the best investor possible. So I wanted to eliminate anything that could get in the way of becoming the best investor possible. And a big part of that to me was eliminating biases. Now, something I kind of a conclusion I kind of came to in the process of doing this is like you start looking into the earnings of like Google, Meta, Microsoft, uh, Adobe, what like Uber. You start digging into these companies that like people have very strong opinions about like these companies. They'll like them or not like them. And like I said, I wanted to eliminate those biases. Like if I can make a fortune in one of these companies, or if one of these companies won't make a fortune, like if the stock price is destined to go up, regardless of our personal feelings, I want to own it. And if it's not destined to go up, I don't want to own it. So now, of course, that's the thinking going into it. Of course, you're not going to have a 100% success rate, right? So I came to a conclusion myself that tech platform monopolies or like duopolies would rule over the future or be at the top of the pecking order. So something I kind of realized is like pretty much every like small business in the West. I mean, you're having to give a cut of your profits to various tech platform monopolies that you're dependent on. So like Microsoft, Adobe, Intuit. Um, if your business like makes enough money for you to just order DoorDash, like DoorDash, right? So um, and you have to start. I started thinking about how dependent every like business owners and consumers themselves are becoming on these tech platforms, and uh, power generally is directly correlated to dependency. If you get a lot of people dependent on you, you'll become more and more powerful. And if you're dependent on others, you're relinquishing your power. And so, around a year ago, I found a left wing author. Now, I'm not. I'm pretty centrist now, um, but I'm not a left winger by any means. Like, I would not call myself a leftist, but this guy would. So I found a leftist author, Yanis Varoufakis. It's a Greek name, and he wrote a book a few years ago called Techno-Feudalism: What Killed Capitalism. Now, what made me even search for this book is I was curious. Like, I came to this conclusion myself that these tech platforms are probably going to become increasingly dominant and make increasingly more profits due to their dominance. Their sales will increase because they'll be able to raise their prices. Because are you going to cancel your YouTube Premium if they raise the price $5 a month? No. Are you going to cancel your Photoshop subscription because they raise $5 a month? No. Are you going to like not use an Uber if they raise prices 5%? No. Like we're kind of like dependent on these platforms. And the idea is like they might have one competitor or two competitors, but you can just own them all, like say like Uber and Lyft, or Uber with Uber Eats and DoorDash, or say like with the cloud, you have like the main providers of the cloud are Google, Amazon, and Microsoft. Yeah, they technically have some competition, but you can just own all three, and basically no matter what, the masses will have no choice but to ultimately contribute to your bottom line because they can't escape using your platform if they want to be economically relevant. Um, so anyway, this leftist Yanis Varoufakis, I read the book, and if the leftist is coming from an entirely different perspective and motive, like he's not an investor, he wants to like revolt against the system, but I came to the personal conclusion that after 2020, a revolt is probably not going to happen. The only way a revolt is going to happen, they have the people too comfortable. The only way a revolt is going to happen is if like they shut down the internet, like they did in Iran for some reason I heard, or if people are starving. But we have food stamps, we have we have uh, we have all sorts of aid where, like, for the first time in history, poor people are fat. Um, that's never happened before in history. Why is that? Because in the past, if you ran out of money, you would starve. That doesn't happen now. So the bread and circuses are pretty reinforced. Even poor people are pretty comfortable, even though they're in perpetual servitude. They're comfortable. They're comfortable slaves. If you keep they're comfortable. They're not going to revolt. So I'm betting that there won't be a revolution. Um, Whereas this author is kind of hoping there still will be. Now, there's the risk that, like, what if no revolution ever comes? What if these tech platforms just increasingly dominate us? Now, if the way you prepare yourself for that future is to have a part equity, part ownership in those companies, the idea is to become a digital landlord. Like, if you own enough Alphabet shares, where, like, if you were a billionaire where you had enough Alphabet shares to get 1% of Alphabet's profits, like, you'd be set. Like, imagine all the YouTubers in the world, all the people using Android operating systems on their phone, all the people using like Gmail, like pretty much the whole world is like serving you. Like you're basically just like this ultimate landlord. Like you're effectively a digital landlord, and everyone is just paying you rent to exist on your land. And so yeah, I mean, this leftist the Yanis Varoufakis, this author, he came to the same conclusion. Um, in fact, here, maybe I can even just show you the book. Ugh. This is the book, and I mean, I've highlighted all sorts of stuff. Um, it's been, I mean, even though he approaches it from an angle that, like, I mean, I was a supporter of Ayn Rand at some point, so for me to like be reading a leftist is like, there's some things he says that I'll flat out disagree with, but in this case, it was useful, because because there are things we agree on, which, like, the right wing will never talk about how workers are exploited. They're just like, oh, we're free and we can just choose who we're working for, and if you don't like it, you can quit your job, and think about all the risks and the capital the business owners are providing. So it's not exploitation, but yeah, they're like, capitalists can use excess money, turn it into capital, and make other people work for them, make other people subservient to them. It's like they earned it in that they're risking their capital and they're delaying gratification. They could just liquidate the capital, everyone loses their jobs, and they could just retire. Um, there's things that the capitalists are doing to earn that money, like risking it, delaying gratification, but it's still exploitive. Like it's a combination of a right wing and left wing. Like, if you're educated from both a right wing perspective and a left wing perspective, you'll realize they're both kind of half right, which is why they both have followings. Like, the best lies have truths mixed into them. So they want people confused. They don't want people coming to like a truth. They want people viewing things in extremes, one way or the other, where it's like half right, half wrong. Um, So increasingly, people and the traditional capitalists are dependent on tech platforms or software. So say you're a restaurant, like you own a restaurant, DoorDash, you're kind of reliant on Uber Eats and DoorDash. Otherwise, like if your relationship with them goes to shit, you'll lose 20-30% of your sales. Like a increasingly larger and larger amount of sales in the food industry is coming from rideshare delivery programs like DoorDash, Uber Eats, Grubhub, or whatever. And or let's say, think about how dependent people are on Google. Think about how dependent people are on, like, if your company uses Adobe like Acrobat or Adobe whatever, an Illustrator, you're not going to be canceling that subscription. Like it would totally just upend your business model and how you do things. And another one is like Intuit. Like a lot of companies use them for like their timesheets, or like small business owners use it for QuickBooks. Like it would just be a huge hassle to change. You're probably not going to change. Um, so this dependency on these tech platforms leads to an increase in profits for the large um, corporation or entity the entities dependent on. So um, like the what reinforces the business model of Google, Adobe, etc. is if you want to be relevant to the economy, you have to go through them. Even like Instagram with Meta, right? Like if you're a social media influencer, you have to use them. You know, even if you're making millions of bucks a month because you're some huge influencer, you're serving Meta. And if you have shares in Meta, you're getting like a piece of everyone's profits. Um, so by investing in these powerful platforms, you become a type of digital landlord where you can sit idle and charge rent on those that are dependent on what you offer. Um, YouTube is the biggest example. I mean, I think YouTube is the best asset on the planet. If I could own flat out any asset on the planet, it would be YouTube. I mean, ever since people have second monitors on their home PCs, the second monitor probably almost always has YouTube. Uh, it just has literally everything. And how is someone going to compete with YouTube? Like, every year that passes, they have a year's worth of videos in their archives that are their property. Like, the YouTuber, it's not the YouTuber's property, it's YouTube's property. So, um, so it's better than a traditional landlord because technology and globalization will mean that the whole world potentially will serve your portfolio's bottom line when you invest this way. So, and I'll get to a list of example like I've already mentioned some companies, but I'll get to a list later. Um, well, I guess I can mention. So you're basically, the internet is being privatized by dominant companies everyone's dependent on that have huge chunks of the market share. Unlike like other industries, like say you're like in the restaurant industry, you'll have like 0.05% of the market share because you have a billion, like you have thousands of other restaurants in the area you're competing with. Like think about, like, if you're YouTube, who are you competing with? Like really, if you're Uber, who are you competing with? Lyft and DoorDash. Oh, you have like, so you have like 50% of the market share. Like, what other industry can you have 50% of the market share? And the idea is that these companies will consolidate further and further, and so the profits are all like increasingly in their hands. And not only that, but the companies themselves are going to do buybacks. So I mean, a lot of people who are like into Bitcoin like to talk about, like, oh, there's only 21 million Bitcoin ever. Well, when you're invested in stocks, the amount of shares that exist for that company, if they're profitable and doing buybacks, is ever decreasing. So the amount of US dollars in circulation is ever increasing. The amount of share, like Google shares, is ever decreasing, or Uber shares decreasing because they're doing buybacks. Even Adobe, they're doing buybacks. So there's less and less shares in existence, and there's more and more dollars in existence, and this gives you a huge tailwind for the share price to go up. And historically, this is that combined with inflation. Like, inflation also gives you a tailwind because stocks are priced in dollars, and dollars are always losing value. But I mean, it kind of goes hand in hand with increasing amount of dollars. So the examples of companies would be Google. Like, the big three are Google, Amazon, and Microsoft. Those are the big three, like, that I almost think are the safest. Like, these companies are probably, you're probably not going to lose 20-30% of your investment. You could if there's a bear market, but they almost seem like the safest investments because everyone's dependent on them, so they're not going away, so their profits are going to go up. And I think that a lot of people are going to think like, oh, they've already made such a massive run, it's too late. No, like, these, if you look at a long-term chart, like, people could have thought it was too late 20 years ago, 30 years ago, 10 years ago. These stocks need time to make money. Like, companies need time to make money. You can't just, if you have the best idea in the world, you can't make billions just instantly. You need time to pass to make the sales. And that's how the stocks take time to go up, because they take time to build up. Ultimately, on the balance sheet, what's causing these stock prices to go up is the retained earnings. It takes time to build up retained earnings. Like, your company can become much more valuable or much less valuable kind of overnight because of the stock market and market capitalizations, etc. But the actual, like, tangible assets and actual tangible money that your company has can only increase so much overnight. I mean, it takes time to make money. Even if you have the best business model in the world, like, more time will mean more money if you're profitable. So other lesser examples beyond Google, Amazon, and Microsoft are Uber, Dash, Intuit, Reddit, Lyft, Adobe, Meta, Netflix, eBay. So, like, increasing, like, eBay is like an interesting example in the sense that, a lot more people are needing side hustles because their job isn't enough to make ends meet. So a lot more people are using eBay as a side hustle, DoorDash as a side hustle, Uber as a side hustle. And so another part of my investment philosophy, you want to keep track of the human activity, because when you study history, the wealth is built by, like, riding the wave of human activity, changes in activity. In the 1800s, people started going, riding in railroads. And the people in railroads made a bunch of money. People started using oil. People in oil started making a bunch of money. You just have to think about any given era, like, where the human activity is. And now everyone is just sitting at home watching their devices, and all the ad revenue that's going to be made in the next 5, 10, 20, 30 years, because people are just staring at their devices. And you have to imagine these flows of money, all the figurative money and currency that's flowing around, that will be made inevitably. Like, and so, yeah, I wanted to talk about, investing for a techno-feudal future, because I do believe that is what awaits most of humanity, is a feudal-like society where economic mobility is reduced kind of back to the point at where it was in the Dark Ages. Not to that degree, because there's a lot more opportunity now. However, inflation is going to be a bigger and bigger problem for the average American, and nothing is going to stop it. Like, prices will never go back down to what they were 10, 20 years ago. Like, the system is designed for the prices to go up and up and up. And eventually we're, like, going to have a bond crisis, because there's nothing to be gained by loaning the money to the government, because they're paying you back in depreciated currency and lying to you about how much is being depreciated. So that, that's generally why I avoid bonds, is I don't think that they're compensating you enough for the risk of inflation. That, I mean, it's not even a risk. Like, the inflation is guaranteed. So I wanted to make this video, and in just case if you agree with it, then maybe you can think about investing the way I'm investing. A big part of me is I'm passionate about this because I believe that you have to protect yourself and your family financially, and if these companies are going to be as dominant in the future as I think, then not owning a part of it is a huge risk, a huge mistake. I mean, it's kind of like, what if you didn't buy a house 30 years ago? Now they're too unaffordable. Now, what if Google is too unaffordable to buy in 30 years because it's, a $40 trillion company, whereas now it's like four, you know? It's a mistake to think that these numbers can't get any bigger because like the system ever since 2008 pretty much functions on inflation. Like, so you have to expect more inflation, and so you have inflation and everyone's dependency on technology are the key aspects to the investment strategy. So let me know what you think. Please, if you made it this far, like and subscribe or think about it. Or give me ideas for another video topic. And yeah, let me know what you think.